I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Broderick, natural resource analyst for UncommonWisdomDaily.com. Plus, he runs Red Hot Resource Millionaire. Welcome back to the show, Sean.
Thank you very much for having me on.
Gold, I was taking a look at your chart. While gold has performed well as an ETF, silver apparently is doing even better.
Yeah, we're actually speaking about the amount of gold and silver that the ETFs are adding right now. And yes, we have seen investors add to the holdings in the GLD and the other gold ETFs around the world. Those charts that I sent you are all the gold ETFs in the world. But silver, I mean, the amount of silver held in ETFs around the world is just taking off, blasting off. I think a lot of that has to do with the outlook for the economic growth in China and China's One Belt, One Road expansion. They've just pledged another $100 billion to expand that whole infrastructure project. Silver is an industrial metal along with being a precious metal. And I think people are starting to, think things could be looking up on that side.
28 nations invited to that Silk Road conference in Beijing this week. Canada's among them, but I don't think the U.S. is looking to expand international trade.
Well, no. We had our own thing come up, which was another treaty. Unfortunately, what they did was they let the companies that would be that would be affected write the treaty. So it wasn't ordinary people writing it. It wasn't even politicians writing it. It was just the companies. And as you might expect, what they wrote for a treaty just pretty much gave them everything. And so there was pretty much widespread outrage at that, and they really shot themselves in the foot with that. Mm-hmm. So I think the U.S. will regret not having some kind of Pan-Pacific partnership. I don't think the treaty that they had originally proposed was the right treaty, but something like that, because the whole point was to get something to counterweight Chinese influence. And so without that, the U.S. will really be adrift, at least when it comes to global trade, for some time to come. Now, we are the world's big powerhouse in global trade, so it's not like we're going to fall apart overnight, but we really needed something like that to counterbalance what the Chinese are doing.
And China's made it no secret that if the U.S. doesn't want to take a leadership part, then they're more than glad to take their place.
Yeah, in fact, China is going to be floating oil futures in China based in Chinese yuan. That's coming up soon. You don't hear anything about it in the Western press, which is weird because it's all over the Chinese press, but I guess people aren't talking about it for some reason. Mm-hmm. And why that's important, again, not overnight, but it could eat away at the support for the petrodollar if they get more and more traffic in the Chinese oil future. Then they don't need the petrodollar so much because people will be buying oil with the Chinese currency, not with the U.S. currency. And the petrodollar is one of the things that underpins U.S. power around the globe. So that actually is not a good thing. In fact, we have seen recently that some geopolitical developments, mainly here in the U.S., but elsewhere as well, have really eaten away at the U.S. dollar strength. In fact, I would have guessed that things like silver and gold would have pulled back today, except the U.S. dollar really fell out of bed and just went, it's it has a ways to go before it hits support too, so we'll see how that goes. But I think people are coming around to the idea that the infrastructure program, which had been proposed for the U.S., they already knew it was going to be pushed out to 2018. Now it's probably going to be pushed out until 2019 because President Trump's really distracted with messes that are going on right now, and they're really focused on things like tax cuts. So that's pretty much going to suck up all the political oxygen in Washington, D.C. for probably the rest of the year and on into next year. And so you put that together, and so that's why we're seeing U.S. dollar weakness, and I think there could be some other stuff in there as well, which makes it a good environment to be in gold. I mean, we just launched my new gold publication, May 4th, which luckily happened to be the bottom in gold. And, things are moving up. We have Integra Gold, and you probably saw the news that Eldorado just announced that it was going to purchase the rest of the company that is not already owned by Eldorado. Eldorado owned 13% of Integra, and now it's going to buy the rest. And they offered like a 50% premium. So, nice time to be in this part of the market, and that's not the only one we're going to see out there. I think this is a time when all of these gold producers know they have to fill those pipelines. Things probably aren't going to get a lot cheaper, and we're going to see a bunch of deals made going forward.
We'll have more with Sean Broderick right after the break.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with Sean Broderick. Sean, you just mentioned that other gold producers could be ripe for the pickings. Is the big difference between the Canadian and U.S. dollar one of the reasons why American producers would be looking at Canadian companies?
Yes. I mean, we have seen big discount in the Canadian dollar for quite some time, going well into early last year. It's just been on a big slippery slope, right? Now, it may have bottomed, actually, which could put some urgency in things. I mean, I have to say the Canadian dollar doesn't look bad recently. It actually looks pretty good, but it's still at a huge discount. In fact, it's only trading at about 74 to the U.S. dollar as we speak. So that means things in Canada are on sale. And so I imagine some big companies that say sell their product in U.S. dollars, which would be gold miners, might be looking to pick up some great companies on the cheap. And there are some good projects across Canada. There are good projects in Mexico, which also saw its currency head lower. There are other projects too. So I think this could be a real summer of acquisitions.
Mm-hmm. Now, of course, the price of oil and the Canadian dollar seem to be tied, and so many people are telling me that the price of oil likely will go down, and along goes the Canadian dollar with it.
Well, I just wrote a piece on that, and I think that this recent rally we've had in oil could go on for a bit longer. And for one thing, thanks to OPEC cuts, that kind of stuff, we're slowly working off the global surplus in oil. And OPEC and Russia are now talking about extending those cuts into next year, which will help work off the surplus. Longer term, you're right. There are so many problems for oil. Just new supply coming on, not only from North American shale, which is a big source of new supply, but places like Nigeria and Libya and Iraq and stuff like that. So there's new supply coming on, but in the shorter term, I mean, let's say the next 6 months, it could be a good time to be in the oil space. And we saw a recent bottom, which seemed pretty solid. And I and some other people added some positions after that, and we haven't been wrong yet. Now, I like to look at weekly charts. It will be interesting to see how this week ends. And, you know, the oil markets are where black swans breed. Either way, I mean, you could have news come out that could send oil plummeting, or news that could come out that could send oil rocketing higher. So you hate to plan for the long term in oil, which I think is very tough on oil companies because they have to plan for the long term. It's very, very difficult for them. But we've also heard, for example, that there's so much debt in the oil fields that that many of these companies are going to be in serious problems. But I was just reading today that the interest rates are so low that the burden isn't nearly as bad as it might seem on its face, simply because they're paying lower interest rates. And so many of these companies which could look distressed, as long as interest rates don't really go a lot higher, they'll be okay, especially if oil prices go up, because then they'll be able to service that debt. And this, of course, leads to more oil on the market, right? Because the more companies you have working, the more supply you're going to have. So that, in the end, will probably force oil prices lower, but it's going to be down the road. In the shorter term, I am bullish on oil, and I am bullish on oil producers, pipeline companies, services companies. You have to be selective, of course, but I think there's some real opportunity there.
We'll have more with Sean Broderick right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Turon property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Sean Broderick. Sean, outside of oil and gold, is there anything that you find exciting right now?
Well, certainly I'm looking at the base metals. I'm not really looking at palladium recently, which is it's just really gotten kind of a knock, and that's very interesting. When you look at what's going on in the palladium market, it's really going nowhere. And so is it a surplus of supply? We have heard some news in the auto industry, by the way, that of really stuffed auto lots. They have a lot of cars that they built with the intention of selling, and they haven't been able to sell them nearly as much. So I'm in no hurry to get into either palladium or platinum. But look at copper. It looks like, I mean, we might be seeing a bottom. It's a nice move in that we've had since early May. And the industrial metals, again, because of China, we have to keep coming back to that. But the industrial metals could look quite good. We just need China to follow through, but they seem to have every intention of doing so. And so we'll see how that goes. There are also some agricultural things that look good, but the problem with agriculture, I mean, is, of course, that can change with the weather, can't it? And so I hate for anyone to take my advice on something like that when, things might not work out. So I would look at not only the precious metals, I would look at energy like I talked about, and I'd look at the base metals as well. I think all of those look good. And that's just in the commodity sector. There's a lot going on in things like drones and stuff like that that's quite exciting. Cybersecurity has looked good ever since they had that new hack attack that's been spread all over the place, which may have North Korean connections. If that is connected to North Korea, you know who's going to get a lift out of that? Those stocks that actually provide planes and drones and other military stuff, because then we'll see things heat up with North Korea again. So I've had a lot of friends try and call a top in this market, and while we have seen the Dow and the S&P 500 kind of plateau recently, the NASDAQ 100 has really been on a tear, and it doesn't seem to be slowing down that much. That's because, again, it comes back to tech, comes back to places where you can see real earnings growth. And so this could be a bifurcated market for quite some time. And as long as you're choosy, I think you have an opportunity to really do well.
Sean, thank you so much for chatting with us.
Thanks very much. I appreciate it.
My guest has been Sean Broderick, Natural Resource Analyst for UncommonWisdomDaily.com, and check out Red Hot Resource Millionaire. You're listening to HowStreet.com Radio. Any questions for us or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.